A very good morning, dear students. As we are going to begin a new week, I pray that God blesses each one of y'all with the riches of His grace, with the treasures of His love, with the comfort of His mercies, with the strength of His presence, and with the touch of His care. In today's class, we are going to begin a new chapter which is called Recording of Transactions Part 1. We have completed chapter 1 and chapter 2. We have understood the development and importance of accounting, where accounting is the source of disseminating the financial information, along with which we have also discussed on various basic accounting concepts that guides in the preparation of recording the business transactions. It has been indicated that the term accounting involves a process of identifying and analyzing the business transactions, recording them, classifying them, and also summarizing their effects, and finally communicating it to the interested users of accounting information. In this chapter, children, we will discuss the details of each and every step involved in the accounting process. The first step involves in identifying the transactions to be recorded and preparing the source documents, which are in turn recorded in the basic book of original entry called journal, and are then posted to individual accounts in the principal book called ledger. So, let us try to understand the first step, that is identifying the transactions to be recorded and preparing the source documents. For this purpose, let me take you all to the meaning of transactions once again. What did we understand by transaction? A transaction is an event involving some value between two or more entities or person. Let me give you all an example of a transaction. After securing a good percentage in your previous exam, as promised, your parents wishes to buy you a laptop. You go to the store along with your parents to buy a laptop. The dealer gives a cash memo along with the laptop, and in exchange your parents makes a cash payment of rupees 35,000, assuming that the laptop price is 35,000. Purchase of laptop for cash is an example of a transaction which involves the exchange of two things. What is it, children? Payment of cash and delivery of a laptop. Hence, the transaction involves two aspects: give and take. Payment of cash involves give aspect and delivery of laptop involves take aspect, and this is from a customer point of view. In our example, the customer is your parents. So for them, payment of cash is a giving aspect and delivery of laptop is a taking aspect, because you're going to receive the laptop. So therefore, we can define business transactions are those transactions that involve exchange of economic consideration between parties, and it also has twofold effects. What are the twofold effects? The giving aspect and the taking aspect, that are to be recorded in at least two accounts. Now, let us go to the next concept, which is source documents. We have identified the type of transactions to be recorded. The next one is preparing the source documents, for which we have to know the meaning of source documents. We have already read this term as well. Let me read the meaning to you all. Business transactions are usually evidenced by an appropriate document, such as cash memo. In our previous example that we saw, that the dealer issued a cash memo along with the laptop, correct? So cash memo was an evidence document. Other documents could be like invoice, sales bill, check, salary slip, etc. Therefore, a document which provides evidence of the transaction is called the source document. We have read this meaning in one of the term. Do you all remember, children? We called it as voucher. Another term for source document is voucher. So what was voucher for us? A voucher is a source document that provides an evidence of the transaction. Am I right? The same thing is source document. So another word for source document is voucher. Who usually prepares a voucher, children? It is the business. Am I right? In our example, the dealer provided a cash memo for the purchase of a laptop. So now we have to get into the next aspect where we will be learning the types of source documents or vouchers. And please remember, this is being prepared by a business and not by the customer. Okay, in our example, the customer was our parents. Will parents prepare a bill? Absolutely no. So what happens? It is the business who has to prepare the vouchers. The next topic that we will be learning is the types of vouchers. That is nothing but the types of source documents. Usually there are three types of source documents. You have the transaction voucher, compound voucher, and then you have the journal voucher. So these are the three types of vouchers that a business usually prepares. So let us try to understand the first one. What is the first one? Transaction voucher. You all can remember the example, children. Purchase of a laptop for cash. Okay, so you have purchased a laptop from a particular store and the dealer has provided you a cash memo. So our cash memo is the source document. So how is the dealer going to prepare this particular voucher? So let us try to understand the meaning and then we will look into the format that he is going to follow to prepare the voucher. What is transaction voucher? A transaction with one debit and one credit is a simple transaction, and the accounting vouchers prepared for such transaction is known as transaction voucher. What was our example, children? Purchase of laptop for cash. One debit, one credit. You all won't understand debit and credit, children, but for now I'm just giving you all the meaning from an example point of view. Our example was purchasing a laptop for cash. So you've just purchased one asset for which in turn you have paid money. So there was a give and take aspect. Am I right? So when there is one give and take aspect from a customer point of view, okay, that's when we call those types of transactions as simple transaction. And now when we are recording these transactions in the form of voucher, the voucher prepared for a simple transaction is called as transaction voucher. The specimen for transaction voucher is shown beside. What do I mean by specimen, children? The format. Now, the format what I have put across is very important from your exam point of view. It's almost a 5-marker question. It's easy to fetch this marks. You might be wondering whether the same format is applicable in the practical environment. Some organization or business do follow, children, but there are some where it might vary, but there are certain points that they still stick on to. Okay, so please look into the format. You need to start with transaction voucher. Name of the firm is nothing but the company's name or the business name. Then voucher number. What do we mean by voucher number? The bill number. Okay, if you notice, when you have, when you go for a particular store, for example, in our example that we saw, that a laptop was being purchased. So what happens when you go for such big stores? They give you a bill, and in the bill, in the corner, you will see a 3-digit number or 4-digit number. That is nothing but the bill number. Okay, so voucher number is the bill number. Date is nothing but you're going to specify the date on which the transaction has happened. Debit account and credit account is nothing but the giving and the taking aspect. You will understand more in depth in our coming up classes. For now, understand debit account, credit account. What is the amount that you have incurred to buy that laptop, which was in our example, it was 35,000. And then narration, that is, you're going to give an explanation about the transaction. You are going to explain what was the product purchased, how much was the quantity. So in our example, we can simply write it as purchase of laptop for cash. That is our narration. Authorized by is nothing but who is under whom you are actually made this particular voucher and who's preparing it. Usually authorized by goes most of the time with the cashiers, that is the one who is maintaining accounts, right? It will be that particular person, and who's preparing it, it will be the general person who's sitting at the counter near the the one who issues the bill, right? His particular signature will be put across. So this is called transaction voucher. Any simple transaction that takes place in a business, the dealer or the businessman has to produce a bill. Correct? They have to produce a source document. It could be either for the customer's purpose or for the business purpose. Usually it is for both the purposes. There are some customers who neglect on fetching a bill, but otherwise then too the business has to maintain such bills. So if it is a simple transaction, they have to prepare an accounting voucher, and for recording these types of simple transactions, the voucher prepared is called transaction voucher. The format of the voucher is very easy, children. It is a 5-marker question. Kindly remember the format. The debit and the credit aspect you all will be learning in depth. For now, just understand from an example point of view. It is just the giving and the taking aspect from the customer point of view. Okay, it is opposite when it comes to a business point of view, children. Payment of cash involves giving aspect for a customer, but when he's paying it to the customer. He's paying it to the business. So for business, it is a receiving aspect. Am I right? It is basically the taking aspect. And in other side, if you see, delivery of a laptop is a take aspect for a customer. But for a business, it is a giving aspect. So it is therefore the opposite way. For a customer, payment of cash is give aspect. Delivery of a laptop is take aspect. For a business, receiving the money from the customer becomes a take aspect, and delivery of a laptop becomes a give aspect. Okay, so this was the example for the transaction voucher. The next type of voucher is compound voucher. What do we understand by compound voucher? Vouchers which records a transaction that entails multiple debits or credits, and only one debit and credit is called compound voucher. Now let me put across to you the same example. I just want to add on few things. What was the example? Purchase of laptop for cash. Now along with cash, you have decided to buy furniture, television, a radio set, maybe any of the household items or electrical appliances from that particular store. So what happens, you have done multiple purchase, and for which you have to pay a single amount. Am I right, children? For example, 35,000 was for laptop. Okay, now you wanted to buy some mobile phone, which is 20,000, and then you wanted to buy one electrical appliance, maybe a hair dryer or whatever for that matter. Okay, so you might be paying another 5,000. So what happens, this is an additional purchase that you have made. So it is no more a single transaction, it's no more a simple transaction. You have done multiple purchases. okay, but for which you're going to give only one debit or one credit, that is only one payment. Okay, so with this, let us try to understand the types of compound voucher. There are two types under compound voucher. You have the debit voucher and the credit voucher. A debit voucher is prepared when cash payments are received. So who prepares the voucher, children? It is always the business who prepares the voucher. Don't forget that. No customers, no consumers will prepare the vouchers. It's the same thing I told you all even in a transaction voucher. It is only the business who prepares. So everything has to be looked from a business point of view and not from the customer's point of view. That's why I told we had the opposite transaction. Payment of cash is a giving aspect, but for the customer it is a receiving aspect, that is taking aspect. Delivery of a laptop is a take aspect for a customer, but for a business it is a giving aspect. So you have to focus mainly on the business aspect. You should not bother about the customer's perspective. The reason being is vouchers are usually prepared by the businesses. So when I say a debit voucher is prepared when cash payment are received, that means when the customer pays the money for a specific transaction. Okay, that time we prepare the debit voucher. Okay, what is credit voucher then? A credit voucher is prepared when cash payments are made. So what happens, for example, the store, that is the businessman or the store, has to stock up the goods. Okay, when they are doing n number of sales, they need backup of goods, right? So they have to go buy the goods to keep a stock in their business. So when they are buying, they have to do a payment. Am I right, children? When the business is making a payment, they have to prepare a credit voucher. On the other hand, when the business is receiving the cash payments, they will be preparing the debit voucher. Okay, debit when the cash is being received, credit when the business has to pay the cash. What is compound voucher? When you have multiple purchases or multiple selling, but you have to do only one time payment for it. Okay, so this is the compound voucher. Please remember, children, both credit and debit voucher are equally documentary evidence for the payment of cash and for receiving the cash. Both is important, you cannot neglect. So that's why I always tell you all, if you could remember the concept called dual concept, for every debit there will be always a credit. Okay, so please remember, whenever you're preparing a debit voucher, there will be a credit voucher as well. Yes, when you are doing a purchase of goods, okay, so what happens, purchase of goods you are paying, for which you will be preparing a credit voucher, but there is another account which is reflecting on goods. For that also you have to go show a separate account. That's why I told you all, business transaction always has twofold effects and it has to be recorded at least in two accounts. When I talk about two accounts, for every debit there will be a credit. In depth we will be learning in our coming up classes, children. For now, understand, debit voucher is prepared when the cash payments are received by the business. Credit voucher is prepared when the cash payments are made by the business. Okay, so this is the second type of voucher. Let us look into the specimen of these vouchers. Debit voucher, credit voucher. Please remember, children, transaction voucher also can be asked for your 5 marker. Debit or credit voucher both can be asked for a 5 marker question. Please don't neglect to learn the format. Okay, look into the debit voucher first. You start with debit voucher. Name of the firm is nothing but the business name. Voucher number is the bill number. Credit account, that is we will be indicating for the money that is being received. You will be having a credit account number which you will be stating in that. And then for amount, what is the amount that you are going to receive? You all know for what we are preparing debit voucher. It is for receiving the cash payments. Please don't forget that. Then you start with debit account. You have the serial number, what are the transactions that you have made. Code is nothing but some products have the code. So that code we will be writing. And then you have the account name, amount, especially in rupees. Narration is nothing but the explanation of the transaction. Authorized by and then prepared by. This is your debit voucher. On the other hand, if you could see children, you have credit voucher. The only difference in this is in the debit you would have written credit account, but in the credit voucher you would have written it as debit account. That is the only changes. The format are exactly the same. Wherever you have written credit in debit voucher, when you are preparing the credit voucher, it will become debit. Could you see? See here, credit voucher, name of the firm. Voucher number, here it is debit account. What did we see in the debit voucher? We saw it as credit account. But if you see in the credit voucher, it is debit account. Amount, date, and then you also have credit accounts. Okay? Debit voucher is debit accounts. Credit voucher is credit accounts. And then you have the serial number. After the serial number, you have your code, account name, amount, that is in rupees, narration, which is nothing but the explanation. Okay, authorized by and prepared by. So this is the format of debit voucher and credit voucher. It has to be written the way it is shown, children, because it is a 5-marker question and most of the question papers do have these questions. Okay, just practice this format. The only difference is the wherever in the place of debit, no, in debit voucher you only have to remember that instead of credit account, in credit voucher you will be writing it as debit account. The rest everything is same. Okay, so with this we have completed with the second type of voucher. Okay, now let us go to the last type of voucher, that is journal voucher, which is otherwise known as complex voucher. Okay, let us try to understand the meaning. Transactions with multiple debits and multiple credits are called complex transactions, and the accounting vouchers prepared for such transaction is known as complex voucher or journal voucher. Okay, so what happened in our previous voucher, children? We had multiple debits and credit with only one debit or credit. But here what it is? Multiple debits with multiple credits with multiple debits. When you have like this, it's basically a complex transaction. Now you all will not understand debit credit, but try to understand there will be a lot of purchases, sales. It's usually a difficult transaction that takes place in the business. Now when you have to record these types of transactions, or when you want to show them in a type of a voucher, the type of voucher chosen to prepare such complex transaction is called journal voucher. The specimen for the required voucher is shown aside. Journal voucher, name of the firm, voucher number, date, debit entries. Whatever debits you have done, that is whatever purchases, or depending on the respective account, whatever debits you have done, you put it in this particular table. That is the serial number, code, account name, amount in rupees, narration, that is the explanation. And then you go for the credit entries, serial number, code, account name, amount in rupees, narration, that is the explanation, authorized by and prepared by. So to tell you all in short what is journal voucher, children, when a voucher is prepared, okay, that is related to a transaction which does not involve the movement of money. Basically for a credit transactions, when you have this combination of cash and credit, you prepare this journal voucher. Who prepares this voucher, children? It is always the business. Please remember, hereafter when we read a transaction or when we look into a particular problem, everything is from a business point of view. Please don't read it from a customer point of view. Okay, it is always from a business point of view, and therefore we understood that the vouchers, the 3 types of vouchers, are prepared only by the business. Nowhere the customers or the end consumers prepare such type of vouchers. So what is journal voucher? A voucher that is going to record those transactions that does not involve the movement of money, basically a credit transaction. Okay, when you have a lot of cash and credit transactions together for a particular transaction, that's when we call it as a complex transaction. And in order to put them in a form of a voucher, the type of voucher used for this particular complex transaction is called journal voucher or complex voucher. So we have completed all the three types of voucher. The last topic for today's class, one of the most important topic, is the accounting equations. Very, very important. You need to know the accounting equations. What is accounting equation? Accounting equation signifies that the assets of a business are always equal to the total of its liabilities and capital, which is nothing but owner's equity. The accounting equation reads as follows: assets is equal to liabilities plus capital. When you'll see these words, assets, liabilities, capital, you all should immediately get back to the terms of assets, liabilities, and capital. What are assets, children? The economic resources that a business uses for its operation. What are liabilities? Usually the payments, it could be like loans, the payment of salaries, wages, that is payments of a particular transaction in a business is what we call liabilities. What is capital? The initial investment made by the owner, who is otherwise known as proprietor, is what we call it as capital. So the assets, whatever economic resources that the business holds, it should be equal to the liabilities plus the capital. When your assets are not equal to the liabilities or the capital, meaning to say, if you have more liability and more capital and your economic resources are less, that is your assets are less, we say that the business is not running at a sound environment. It is not at a positive end. It is not running with a positive note. If you have more economic resources equal to your liabilities plus your capital, we say that the business is at a good position. Yes, it is running in a very effective manner. So the accounting equation clearly tells us that all the assets in the business should be equal to the liabilities plus the capital. The above equation can also be presented in the following forms to find out the missing figures like liabilities and capital. You might be having problems on these accounting equation, children. So you know what happens? A question will have, for example, you have to find the total assets. You have to use the formula liabilities plus capital. But if you have to find the total liabilities, what is the formula? Assets minus capital. To find out the total capital, assets minus liabilities, which can be otherwise written as A is equals to L plus C, L is equal to A minus C is equal to A minus L. Since the accounting equation depicts the fundamental relationship among the components of the balance, it is also called the balance sheet equation. We might ask you for a 1 marker. What is another name for accounting equation? You can tell it as balance sheet equation. Please remember the formulas, children. And the main intention behind the formula is to state the importance that whatever assets the business is having, it should be equal to the payments plus the capital. When I say payments, it is the liabilities. That's when we can say that the business is running in a very good position. Please don't forget the accounting equation, along with which practice the formats of transaction voucher, compound voucher. When I say compound, both debit and credit voucher has to be remembered, and also the journal voucher. With this, we have completed our today's class, children. Any doubts? Kindly ask me in the subject group. Thank you, children. Have a nice day ahead.